Welcome to the Singapore Fintech Festival Fireside Chat, Innovating in Financial Services, a CEO Masterclass. It's brought to you by the Department of International Trade in partnership with 11FS, City of London Corporation and Innovate Finance. So, do you want to know how to get the balance right between being a powerful incumbent or a nimble fintech? What about opportunities for growth and the latest initiatives to deliver it, or ways to collaborate to create a better future for the sector, for SMEs, and also consumers? The customer is always the most important person there. So then you're in the right place. I'm Gemma Godfrey, a non-executive director of various high-growth businesses and a serial fintech entrepreneur. And I'm pleased to be joined by two brilliant and knowledgeable industry leaders. We've got Piyush Gupta, who is the Chief Executive Officer and Director of DBS Group. We've got Rishi Khosla, OBE, who is the CEO of Oaknorth. And we're going to talk for around half an hour on all things financial innovation. So let's jump straight in. So Rishi, Oaknorth is fascinating in the fact that it's both a financial institution and some would classify it as a fintech, so scale and nimbleness. Could you tell us a little bit more about managing those two different approaches?
Sure. So when we started the business 5 years ago, and the approach was really simple. We focused in on sort of the lower middle market commercial customer, and said to ourselves, how best do you service that customer? And that was our starting point on our white sheet of paper. With that starting point, we developed, in our view, the right vision of what a technology solution would look like, coupled with a high, sort of individual relationship model. So our view was the best way to service that customer is a combination of technology and people, but in the right areas as such. And therefore, we've kept a lot of our interaction with individuals, with relationship managers, but a lot of what gets done in the background is technology enabled. With that in our mind, the difference between actually the technology and actually running a lending institution, a bank, is actually less of a difference, because we're always focused on actually how do you solve for the customer, and ultimately how do we develop our technology platform to do that. With our own bank, we get the opportunity to drive our own technology and make sure that we're implementing it and it's doing what it's meant to be doing. And then outside the UK, for example, in Singapore and other markets, we're working with other larger commercial banks and some of the largest commercial banks globally to effectively help them digitize in commercial banking, really where very little digitizations happen to date.
I mean, that sounds interesting. It sounds like, as you said, it's very important to remain customer centric. You keep the customer at the forefront, you keep the relationship personal, but you're using technology, you said, for operational efficiencies, as well as, helping the industry as a whole. I mean, Piyush, likewise, DBS has been seen to embrace innovation. I think DBS was named one of the world's top 10 transformative organizations of the decade by the Harvard Business Review last year. So how do your teams identify and also crucially implement new opportunities?
So, Gemma, first of all, thanks for having me on this talk. And I want to start off a slightly different place. I'll come to your question. But you sort of alluded to twice, powerful incumbents and nimble fintechs. So I want to figure there's a big distinction between incumbents and fintechs. And frankly, I don't buy that. I don't buy that because I believe we're as nimble as any fintech is. And so the distinction between a financial institution and a fintech, I think, is an artificial distinction. I think technology is available to everybody. It's the same technology. It's all open source. I think the capacity to use the technology to service a customer is available to everybody. And it is not preordained that if you were born 10 years ago, you don't know how to adapt the technology or you cannot be customer centric. So I just wanted to start with that just to make the point that I think this idea of innovation, nimbleness, etc., needs to drive every company and business. I agree with Rishi entirely. I think the best way to get your mind around it is to start with the customer. So we can embrace at scale the idea of customer centricity, obsession with the customer journey thinking, the true job to be done. You start building a mindset of this kind of change and nimbleness, even in large companies. And companies who have a history of 50 years like we do. I think it's also instructive to know that today we have 7,000 engineers at DBS. We have more engineers than we have bankers. And so in many ways, we have the capacities to be able to do a lot of our own quick, swift, and nimble development. We use the same tools and the same agile capability. Now, having said that, we do, in addition to trying to train our people to think customer first, customer journey training, customer journey thinking, we do actually orchestrate and try to industrialize the innovation process as well. So I have a small group. It's an innovation group, and the one thing the innovation group has on its KPIs, big bold letters, is their job is not to innovate. Their job is to try and create the conditions to teach everybody in the system to try and think differently and to try and get other people to innovate. So we've come up with we've got a process for innovation. We sort of approach it at 4 distinct levels. At the top of the house, once a year, we get all of us together. We spend a couple of days, and that's an outside-in view. We sort of spend some time getting people to talk to us about the big things that are happening around the world, the big changes in technology, etc. So that causes us to think about 2 or 3 big bets we might want to take. Second, we've actually re-architected the company into what we call platforms. We have about 30 platforms today. And a platform is really a mix between business people, technology people, delivery people, who all sort of work in a co-owned construct, in a horizontal kind of setup. Each of the platforms is charged with creating a vision for 5 years out. We call it Horizon 3. And the 5-year out vision, therefore, by definition, means we have some deep experts in each platform. And their job is to think about what could the future be. So a payments platform or a trade finance platform, they'll be thinking very hard of what could this be 5 years out and how do we start trying to shape the future today. At a third level, as I told you, we run journeys. We run about 150 journeys every year. And the journey could be, for example, how do we improve financing to the MSME? Or it could be how do we improve the mortgage process for an individual customer. But every one of the journeys is charged with trying to make sure that they can think innovatively about trying to make the journey distinctly different. And finally, we have the crowdsourcing idea. We have a program called Want to Wow, which is sort of a play on words like want to wow. And the idea there is we let individuals come up with their own thing and their own schemes for what they think they can do differently. And then the innovation group tries to orchestrate a lot of this stuff. Now, while a lot of the ideation and the work happens in-house, we actually actively solicit help from outside. So we are constantly looking for ideas from other players, from other startups, fintechs, from around the world to see what could empower us in terms of the solutions we're looking for. And actually, sometimes we just believe in serendipity. We're just constantly scoring what somebody's done. And every once in a while, we come across a really cool idea that some startup is working with. We say, aha, this is pretty good. We never thought about this. Why don't we just take this and try to embed it into our own process if we can? So that's how we go about the process of thinking. It's a little bit, like I said, planned and orchestrated, but the outcomes have been quite good for us. So as you mentioned, we've been voted the world's best digital bank twice in the last 3 years, apart from being transformative. Finally, it's about mindsets, but mindsets are helped by having programs of change, in my view. So we do have a systematic program for all this.
I mean, that's incredibly helpful. And as you said, it's interesting to hear that you're reframing the word innovation, which is great. It's not innovation for innovation's sake. You're using the innovation in order to focus on the customer as well. So that's good. Could you actually just, so Piyush, just following on from that, because you kind of alluded to something that, you said you regularly look at what are your 3 top big bets. And you also said that you look at, cool startups and see the ideas that are coming from them. So what do you see as the greatest opportunities for your business or for the industry going forward?
Well, I think without doubt, the number one thing that's happening is AI. I mean, everybody talks about AI and machine learning, but there's no question. That's a complete game changer. It's quite interesting, Gemma, that, banks started dealing with data 30, 40 years ago. We were way ahead of the curve. Most of our credit card businesses, and to a large extent, the MSME business that Rishi does, has been data-driven. But in the last 20 years, we got left, far behind what the tech fins started doing, what the Amazons and Facebooks and Google started doing with data. The truth, though, is that the amount of data we have, the amount of customer interaction we have, gives us access to a huge, huge amount of data. Data we capture, interactions with the customer we don't capture, off-us data, to organize the data and then put insight around it. That is the single biggest opportunity. It can drive our risk management, it can drive our marketing, it can drive customer solutioning, it can drive compliance, everything. So I do think that that's the biggest game changer. But to deal with it, you need to re-architect massively. Your backends need to be re-architected, your data infrastructures need to be re-architected. But most importantly, the mindset of your people needs to change. And frankly, no matter how much you do, you can't find all the solutions. So this is an area we found very productive to work with other startups, people who've already figured how to use data to create insight in any of those categories. So I think that's going to be very big. The other place which I think is hitting tipping point today is blockchain, distributed ledger technology. People have been talking about it for several years, particularly in the cryptocurrency context. It's taken time coming because, like all of these exponential technologies, you need to get to tipping point. But in many private walled gardens, you're beginning to get traction. Trade finance is a great place where you're beginning to see the leverage of blockchain. Payments, you're beginning to see in some closed loops, including some central bank digital opportunities. So I think over the next 2-3 years, you'll start seeing a lot more use of distributed ledger, and you'll start seeing the realization of some of the things people were betting on over the last 4, 5, 6 years. I think the third thing that's going to be a big driver change, which we again are running some labs and experiments on as we speak. I think 5G and IoT will be big, because what that lets you do essentially is use video at scale, and it changes your capacity to be able to deal in a distributed form with a lot of different things. So we're now talking about pop-up ATMs, because I don't need cable and wire. I can just put up an ATM anywhere. And then you couple that with some AI and biometrics and face reading, you can completely change the way your distribution model looks. So I think that's the third area where there is a bunch of stuff that is likely to happen. And as we speak, we are running experiments in all three. I mean, we are running labs in all three areas at different levels and different scale.
It sounds like there's a positive and there's a really important feedback loop within that, which is, you're gathering more data, you're providing better services, but then based on the data, you're able to iterate it to try and continuously improve it. So, no, I mean, that sounds interesting. And Rishi, I really want to give you an opportunity to kind of answer this question as well, because I do think it's one of the critical ones we're going to be discussing today. In terms of for your business, where do you think those big opportunities are coming from?
So let me pick up on what Piyush said and in line with that question. So exactly like Piyush said, banks have always had an incredible amount of data. One of the biggest challenges has been the ability to extract and use that data where actually relevant, and also then the analytical tools on top of that data to actually get foresight around actually a customer position. The area, again, which Piyush mentioned, which I totally agree with, where it has actually very successfully, or the industry has very successfully morphed, has really been about credit cards. And I would say Capital One was one of the original innovators in that space, which drove that change in thinking. With that, I would say that naturally evolved into retail banking, right, and retail lending. And from there, naturally evolved also into small business lending, okay? And all of that area, I would say, if you look at the last 10, 15 years, has evolved so significantly from where it was and what the customer experience was. If you focus on the customer experience, how long does it take actually to get a unsecured lending line today as an individual borrower? I mean, on many apps, you can get a few thousand, 10,000, 15,000, literally with decision in minutes, right? And funding within probably minutes. So you look at that, that's evolved so much. When you're looking to borrow $1, $2, $5, $10, $15 million, that experience has not evolved in many markets for decades, right? And I would argue, actually, if you go back to the 80s, it was actually a better experience because you had localized decision-making by bank managers, etc., which was all taken away, centralized into credit decisioning models in the 90s and through the 2000s for good risk management reasons. But from a borrower experience perspective, it led to a significantly degraded experience. And I would say technology hasn't driven there. The use of data hasn't been driven there. And that's fundamentally the area which Oaknorth is focused on. So for us, it is very much bringing commercial banking and sort of leveling up the use of technology and the customer experience in commercial banking to start catching up with actually what's happened in retail and small business. So from our perspective, that is the single biggest opportunity, because you look at the size of the commercial banking market globally, it's a massive market. And I would argue that a lot of those businesses are the businesses which fundamentally help drive GDP growth, help drive employment growth, actually have impact on communities. When you look at sort of where all the funding ends up going in sort of the commercial space, it's much more large corporate, right? And the large corporate gets serviced incredibly well, but fundamentally that's a totally different place to the business which is looking to borrow a few $1,000,000 and probably is going to be significantly more efficient in the usage of that few $1,000,000 than the organization which is looking to borrow $500 million, right? Now, again, just to make sure I'm framing this properly, that is still a very different space to the micro business which is looking to borrow 50,000, 10,000, 100,000, right? So for us, that's sort of the one area within banking which really hasn't evolved. Many institutions realize the need to evolve, and I think the whole approach for many institutions is almost the wrong way around for us, because many institutions take a top-down macro approach to that space and sort of start with the world in 15, 16, 20 different industries, right? What we do is we start basis that of breaking the economy into today 204 different subsectors and saying each of those subsectors operates in a different manner. Each of those subsectors has different metrics which actually matter to it. And therefore, when you think about driving data, when you think about using data, when you think about AI, it's machine learning, it's all about fundamentally how do you use that to actually build from the granularity to be able to get a significantly different experience through that, rather than the typical top-down approach which is used.
That's fantastic. It sounds like, as you said, you're creating personas. You know, people always talk about understand your customer. Well, here you've got to actually understand the business model, and you can't kind of treat everybody the same because you've got a product to sell. So I think that's really interesting.
But actually, I would say, especially in this environment, right? If you look at, I mean, let's take hospitality, a sector which has been hit so hard by this particular environment. The difference between how a city center business budget hotel is operating versus a service department operator who may be a block away versus a destination resort hotel which is outside a city, right? I mean, you may have occupancy rates which are, you know, in the budget business traveler hotel like 10-15%, in the service department operator 30-40%, and in the resort hotel like 90+%, right? And when you think about that, if you're not approaching that from a level of granularity where you actually understand what the difference is, right, and you're actually treating all of hospitality, right, which many banks do, or even all hotels the same way, you just get to a totally different result in terms of how much appetite you have to lend in, right, and how you treat your existing clients within that sector. So I think especially at a time like this, when previous correlations are so broken, the risk models which banks have used to support their lending for decades has fundamentally proven more challenging to use in this type of environment. That has to give.
Actually, if I can, Gemma, on top of what Rishi said, he's completely on point. But you know, for me, it's actually an even bigger end-to-end process that you could look through. So you think about MSME, and you stick to hospitality and hotels that you're talking about, irrespective. The first thing you need to figure as banks, and this is a big challenge, is we got to be able to figure you are who you say you are, right? And that's a massive opportunity, because the traditional banking way to verify you are who you say you are is archaic. It's just we've not applied technology to it. We've not applied database sources to it. So today, in most of the markets we operate in, the governments let you link into their databases. They let you link into other sources of information, which make it far more easy for me to verify and confirm that you are authentic, you're legit. But that's a whole part of the process which is broken, and the massive opportunities to change that. Then the second is you got to figure you're good for the money. And again, like Rishi said, I completely agree. How to figure whether you're good for the money varies a lot depending on the subsegment you're in, the kind of industry you're in, and what you actually do. So typically what we need to figure is, you know, what's your cash flow like, and, you know, your income source is good. Today, you can find lots of proxies for that, but the proxy varies depending on which industry you're in. So you've got to choose the right proxy elements and the right data sources to figure you're good for the money. Then the third thing you're trying to figure out, okay, I know you're good for the money, but how do I make sure that I give the money to you in the form that you need at the time that you need? So in context and with the right structure. That requires contextual understanding what you're doing, what is the right context, whether you're buying or selling, it's at a point of sale, when do I want to deal and engage with you, and when do I use AI or this thing to nudge you into thinking about your financial needs. And you also need to know, how do I know in advance when you're getting into trouble? So what are the early warning signs and what can I use to try and figure, hey, there might be something going wrong with this budget hotel in the city that you talked about. So it's easy to say, pandemic struck, that's an easy solution. But you could have a lot of sub-segments and sub-themes. So how can you score the universe? How can you find the right data points to give you triggers ahead of time that you better zoom in on that subsector because there could be a problem. Now you think about the entire gamut, the entire chain, every part of the chain is still primitive. And every part of the chain has got substantial opportunity to apply technology and a new way of thinking to address quite substantively differently. And many parts of that, as an incumbent, a big player, we seek to try and do ourselves. But equally, many parts of that, there are other people who are solving the problem for you. So you can go out and find partners who you can plug into to help solve the problem. You don't need to solve everything by yourself.
So can I just respond to that, if you don't mind? So Piyush, I totally agree. And except for the you are who you say you are, that is exactly the mission which we're on. It's really about how do you credit analyze? And when you credit analyze, you bring in the right benchmarks. And as I said, you bring in the benchmarks down to that level of granularity across those 204 subsegments. How do you make sure you've got the right data sources, the right benchmarks? You know what KPIs and operating metrics are the relevant ones for that particular subsector. You've got your peer comparisons for that. You're using that to actually create your guidelines around actually where that business subsegment actually operates. And then once you've done that, you actually run your scenario analysis before you make your credit decision. The scenario analysis helps you create the right structure to determine exactly when you should be giving what type of lines, especially undrawn lines. Then you actually go to monitoring, which is sort of our second segment. Around monitoring, it's about how do you continue to bring that peer benchmarking in on a continuous basis and compare that with the performance on your particular business. Don't think about reviews as annual reviews. Think about a review every single time you get more data. And that data triggers then the early warning indicators. And that's what's driven, at least in our own bank, for us to date, since inception, to have only had 7 defaults cumulative on our book, right? Ultimately, because we have these early warning indicators where we pick things up generally 6-9 months before you'd even potentially have a covenant breach, right? And then how do you actually be able to run stress scenarios across your book on a continuous basis with different scenarios down to the individual obligor level, right? To then supplement what's happening on a macro basis at a point in time and actually then pick up individual credits and again, throw them back in with early warning indicators. So that whole journey is exactly the journey and the mission which we're on.
I mean, that sounds fantastic in terms of it goes beyond just the consumer experience and obviously making sure that they're at the center of this is ultimately, hitting the bottom line and making sure that you've got a much more, 7% default is absolutely, especially in this type of environment where there are more and more companies.
7 defaults.
7 defaults, not 7%. 7% would be
Okay, thanks for clarifying. Yeah, 7 defaults, much better. It's absolutely outstanding. So no, that's really good. I mean, just if we take a little bit of a view then globally, because obviously we're here, it's the Singapore Fintech Festival. So I mean, Rishi, you've been really successful at kind of branching outside of the UK in terms of building these partnerships. How do you view and approach building that exposure?
I mean, look, for us, again, as I mentioned, we've worked with some of the largest global organizations, so someone like an SMBC, for example, but also someone like PNC, who I view as one of the most credit smart organizations in the US, right? So we're working with incredibly sort of large and also, I'd say, tough organizations in terms of to prove your value. But it goes from there all the way to mid-size and very small institutions. Probably the smallest institution we're working with has a billion dollar loan book, right? So it's really across the spectrum. And for us, we made a very conscious decision. The only market which we're building our own lending business in and our own banking is the UK. The UK becomes the showcase of actually what's possible in commercial banking, right? And almost the pure play version of the model. And everywhere outside the UK, we actually enable other commercial banks to do exactly what Piyush said, sort of partner with us to actually leap forward in terms of what they can deliver for their customers, and also, like you said, what you can deliver ultimately for to the bottom line for your shareholders. So that strategy for us is absolutely the strategy which we're executing. And again, the traction we're getting, I mean, hopefully in the next weeks, we're going to make announcements of a number of other large banks which have started using us. So there's a very significant amount of traction, especially in this environment, like I said, where you have this discontinuity, right, in terms of what risk models and risk results give. The need for putting 50-60% qualitative overlays on all of your risk ratings to adjust for the current model, actually providing rigor and providing a structure around that is actually so strong, not only for your own institution, but also as you face off with regulators. And again, we've engaged with regulators in so many markets, and they, I mean, we've run analysis with some of them, with their economic and forecasting units, using our frameworks. And they valued that because, again, it just provides that granularity which is needed in this particular time. So for us, it's very much about continuing on that march.
Actually, that's really interesting that you're bringing in about collaborating as well with the regulator, because obviously, being able to have that good relationship is going to be critical for launching new innovation. And actually, Piyush, just bringing you in on this about, again, you're also incredibly successful in terms of building these fantastic partnerships. What do you think that future paradigm looks like? How do you think that will shape things going forward, the best way to kind of work together?
Well, I think there are opportunities at a couple of different parts of the spectrum. So one is, I think of on the distribution side. For us, we are always looking to partner with people who have large pools of customers. If they do, then we have capabilities that we can actually help distribute into the customer base. So that tends to be things like e-commerce platforms. That tends to be things like telecom companies. Now, these people have large pools of customers. They're trying to add more content or more product capability to be able to build a better value proposition for their customer base. And so that's fantastic for us. We take it, we can, whether it's part of the payment chain, in a lot of these spaces, we provide payment services. We have a API platform. We've got some 600-700 open APIs, and we can plug into many of them. So we do payments, we do lending, a whole host of services, supply chain management, etc. But the other part of the spectrum is where we look to partner with the external providers and startups as partners where they create capability for us. So we take it and integrate it into our own offerings to be able to take it into our market. So some examples of that. For example, we have what we call DigiBank. It's a bank in a mobile phone. We run it in many markets. And it's accompanied by a chatbot, AI-driven chatbot platform. The chatbot in many of the markets is developed by a startup called Khosla, which we eventually took some equity stake in. We use a budgeting tool that we make available to many of our customers, but the actual budgeting tool is developed by another partner of ours called MoneyThor. So they pull this thing together. We use AI, which creates appropriate nudges for customers to tell them at the right time. For example, telling you your electricity bill is too high this month, or you seem to have missed a credit card payment. A lot of that is done by an Israeli-based startup, Personetics, who works with us to try and create that capability. For our trading or for analyzing what's going on, we want to do sentiment analysis of news feeds. So the NLP platform, as well as the news feed, and making sense of it to feed into our people is driven by yet another startup. And then we use robo-advising, for example, with our wealth customers to give them opportunities to build digital portfolios, etc. And again, we don't build the robo-advising tool ourselves. We work with a startup to take it and put that in. Now, I went through this just to give you a sense that the range of areas where we can take capability from startup partners is infinite. Some of them are actually less important. I mean, they're more inward focused, not less important, they're more inward looking. So, for example, we wanted to change the way we do our hiring. And we figured there are large parts of the bank where you could use an AI-driven tool to actually do the interview process and hiring for you. So we created something called the Jobs Intelligence Maestro, which AI tool does the interviewing and hiring, but that's not developed by us. That's developed by yet another startup. In other cases, we try to put gamification into the solutions we take to market. And frankly, we're not the best creator of games, but startups create really cool games. So how do you take those games and build that in? So I do think the opportunity on creating capabilities that we can use is real, as is the opportunity on working with larger customer pools where we can distribute through as well. The one thing we're mindful of when we look at this, Gemma, one is quite clearly the value proposition of the capability has got to be differentiated. But the other thing we're somewhat mindful of is if you're going to take a capability which we're going to package and take to our customers, we need to have some confidence on the capacity of the partner to be there through time. And the last thing you want to do is to take something to market and then the partner goes bust in 3 months. So you get a lot of egg on the face. So you've got to make sure that the partner's got some longevity, they've got some stability, they've got a funding source which is adequate. Sometimes we put money into this just to make sure they're going to be stable and stay around for the medium term. That's how we think about this.
That's fantastic, as you said. If you want to build a good proposition, you need to make sure all the elements are going to carry on that. I mean, we're kind of running down on time, but I just think we're obviously speaking so much about how important it is to have these collaborations and these partnerships. And Rishi, just we obviously have a fantastic opportunity today to tell our audience, kind of give them a call to action. What would you like to see? What do you think is important that we should have in place in order to be able to support these partnerships going forward?
We being the industry.
Yeah, the industry. Yeah, exactly. What do you think? For example, you talked a little bit about the regulator and about obviously, so for example, having a supportive regulator, having a regulator you can interact with, and as you said, do testing with you. It sounds like that's going to be critical. It sounds like being able to have an understanding in terms of the customer base that you're leveraging data to provide a better service. What do you think is going to be important to enable those partnerships to be as well positioned as they can be for the future?
So look, I mean, I think that the regulatory point is absolutely key in my mind, and because ultimately, if you think about the stakeholders involved here, it is sort of banks, it's a regulator, it's then let's say innovation, and you can say innovation inside or outside of banks, right? I.e. with fintechs. But if you look at the Singapore regulator, you can look at the UK regulator, even the US regulator, and let's say those are some of the key markets for us. They all have innovation teams who actually focus on saying, how can we make sure that regulation doesn't stifle innovation, right? And I think that's an incredibly sort of front-footed approach, which is incredibly valuable. I think beyond that, the fact that actually you don't have the physical conference events which allow sort of fintechs to go and meet, and for individuals from, let's not call them incumbent, but larger institutions to actually go and get that exposure means that, in a way, one of the key forums for gaining knowledge inside serendipity, which I'm a massive believer in, right, ultimately has been taken out of the market at a time like this. And I think being able to create moments of potential serendipity to come back in for the industry is probably the single most important thing at a time like this.
Fantastic. Please.
See, one of the biggest things, in fact, why I like this, the leading edge initiative as well. A large part of the answer is in just making sure that people get to meet and get exposed to ideas from each other. And so Rishi called it serendipity. Sometimes you can do it also through some more orchestration. The MAS here has actually been the driving force of creating an innovation exchange platform with the intent that all startups in the region can sort of look for partnership with financial institutions at scale on a virtual platform. So I think you can try to, and I think we can do something of the sort we're trying to do a Singapore, UK, Singapore, other countries. So you create platforms that people can showcase what they have, and people can go and look for opportunities and solutions. So I think orchestration can help. But at the same time, I'm with Rishi. A large part of this finally comes through accidents, chance, and meeting together. So I think that's a big part of the answer. We've got to continue to keep working at creating these common platforms and platforms of exchange, if you will. One of the things that I think the world's in a better place today than it was 5 years ago is I think there's a much better understanding of value exchange. So in early days, everybody felt threatened. This is my customer, or this is my product, or my process, and the value exchange really worked. I spent a large amount of time in previous days trying to figure how much you're going to pay, how much you're going to earn, etc. I think there's a lot more realism on that count all along, which is if you can focus on the customer and you can create incremental value, then there's a reasonable way to get an alignment of that value exchange. But it doesn't always work. Sometimes you still run into situations where both of you want to own the customer, both of you want to own the data, and both of you want to get your pie of the cheese. But that's natural. But I think, to my mind, Rishi's point on making sure regulators are on board and you have platforms to be able to showcase ideas, I think those are quite important.
Absolutely. No, I mean, as you said, it's so important to move away from it's good to have some healthy competition, but the more that we can focus on, working together and being greater than some of our parts, I think is important. So we're almost about to run out of time. So I'm just going to summarize just some of if I choose 5 key points I think we covered today was, first of all, we talked about being customer centric. And I love the challenge in the beginning that maybe there is no distinction between a financial institution and a fintech, that, you can be nimble and you can have scale, which is great. Secondly, to have innovation, not just for the sake of it, but again, to enhance things for the customer as well as internally for our operations. Thirdly, we heard about some fantastic heads up on where we think the industries are going and the opportunities with AI to have more foresight and to have that granularity from the data to provide a better service, blockchain, 5G, but also, to make sure we're really testing creditworthiness of the people that, banks are lending to. Fourthly, about having open APIs and about the importance to be open, to be able to plug in and work together and focus on the value proposition. And I love that distinction between there's serendipity and then there's orchestrated serendipity. But the more we're talking about it, naturally, the more we're going to have more opportunities to collaborate. And finally, having a supportive regulator and to continuing to try and work out where we can work together and have that value exchange and, respect what everybody brings to the table, I think will be very important. So the final thing for me to do then is just a thank you. So thank you, Rishi and Piyush, for sharing so many helpful insights. And many thanks to everybody for watching. Tune in later. We're going to have a Q&A session. I'll be joining David, the CEO of 11FS, to answer your questions. But otherwise, for now, goodbye. Thank you very much.
Thank you.
Thank you.